Hey guys, welcome back to another special edition of the 3 Minute Mile. A special welcome to any new members to the site. Remember that all ideas expressed on this site are not meant as investment advice. Only do trades that make sense to you. Okay, it is right now Wednesday evening, February 28th, the day after the big sell-off in the market. And let's talk about what happened today. The Dow was up 53 points, the Nasdaq was up 8 points, and the S&P 500 was up 7 points. All in all, a pathetic performance, which is fine, and let's get to that. Now, for those of you who've taken my class, you've learned how to judge the health of a stock, or in this case, the market, by the quality of the bounce. Uh, and in this case, the bounce is pathetic. Now, there's still a chance we might get more of a rally, tomorrow or the following day, but so far, this is a very unimpressive rally, so I expect the market to head lower. For those of you who are looking to bargain hunt, personally, I think you're going to get a chance to buy pretty much everything at a much lower price. I'd be looking rather to short into any rallies that we have coming up. Uh, Having said that, let me give you a couple of specific ideas you guys can look at tomorrow if you want. Actually, as a long candidate, let's look at Zolt. Now, I traded this guy this morning and I faded the gap, and it worked really well. Fading the gap is one of the strategies we teach people to do in our classes. The stock at one point this morning was down 5%. By the end of the day, it was flat. You can see here, this was the opening bar over here, and this was the low, and then it closed down, I think, 4 cents on the day. Very impressive. What you want to do, if you want to go long stocks, look for stocks that held up the best and recovered the best after the sell-off. And this is a really good candidate. Now, if you want to position trade this guy, which I actually do not recommend, because if the market wants to go down more, if it goes down sharply enough, the gravitational pull will suck everything along with it. But as a day trade candidate, this is a very healthy looking situation. If the market does have some kind of short-term rally, this guy could participate very well. So this is, I think, a top-notch day trading candidate. Just look for your usual intraday setups. Like, of course, I shouldn't have to say that to you guys. And another idea is WebEx, and this is my short candidate. Um, what I would do is let's take a look at the 5-minute chart of this guy actually. Okay, we can see that after putting in a rally this morning, it spent the rest of the day putting in actually forming a descending triangle. What I would do is short anywhere between 43 and a half and 44 as a nibble, and use 44 for your stop. 44 is up here, so I'm giving it a little more a little more wiggle room. But I try to get short between 43 and a half and 44, and then scale into it as it weakens during the course of the day. My price objective would be 41 or 40, but again, I would trend trade it and let the stock do whatever it wants to do. If you guys don't know what I mean by trend trade, make sure you visit my site and learn how to trend trade. That's what we do, and we let the stock decide what it wants to do for us. Okay, that's about it. A little more bloviating on this market for you guys. And while I'm doing that, I'm gonna pull up a daily chart. I'm gonna pull up a chart of the Qs, show you what happened today. This is another reason why I expect the market to go down tomorrow. Is after a rally today, the Qs formed a descending triangle. For those of you who haven't taken my class, even you can see the consequences of this. The rule of thumb, of course, with the descending triangle is the path of least resistance is the direction of the sharpest angle. In this case, down. So that's why I do expect the market to sell off tomorrow. But again, let me bloviate a little bit about trading versus investing. At Ferndale Partners, we're traders. We're not investors, meaning we think about stocks differently than an investor does. We think about it differently than a lot of the talking heads do on TV. We don't care a whit about fundamentals or earnings because fundamentals and earnings do not move stocks. There's only one thing on this earth that moves a stock, and that's buying pressure, period. And buying pressure is reflected in charts. Learn how to read the charts and come up with strategies. You can have the best stock in the world, with wonderful earnings, and it can still go down 5 or 8% in one day just because the market sucked it down. I don't really care why a stock is moving. I just need to know that it is moving and learn how to read the chart patterns. All the fundamentals are built into the charts. People who've made up their minds whether to buy and sell it for their own little stories, it'll all be reflected in the charts. So if you're not a member of Ferndale Partners, I hope you decide to join us. Come visit us at www.theferndalepartners.com, and we can help you navigate this market. This is a trader's market right now, and we can help you out. So guys, be careful out there. Remember always to pre-plan your trades and always use protective stops and have fun. This is a great market for traders. I think investors are going to be frustrated, but for traders, this is heaven. Okay, have a nice day, and we'll talk to you tomorrow.